I unleash the beast. I ain't dressed to please, I am dressed for me. Where they step to me, it's like chess to me. See these nobodies try and kill the queen. You got best of three, then it's time for me.
I'm very excited to invite my guest, Stuart Thornton from HOOLAH, which is a buy now, pay later company based out of Singapore. Hi, Stuart. How are you going?
Hey, good afternoon. I'm very well. And yourself, Naby?
Not too bad at all. How's work been since in lockdown? We've been in lockdown as well. My team and I, we've been working remotely. It took a little bit of adjusting for sure, but I think we've kind of gotten used to it for the better part of it. How are you coping with the changes?
Yeah, I think we're doing reasonably well. I mean, the irony actually is that we've probably got even better at working together. It sort of forces everybody to communicate a little bit better. Use video, for example, to sort of share and talk to each other, and you sort of force some discipline around that structure of communication. So actually, it's ironic that I think that we've probably done better from that perspective. Business has been crazy. I think that's probably the only word that I can use. It seems to be that the kind of business model that we've got is something that people quite like using at this time, and so it's been really busy, and it's very 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 easy to get out of bed and work, and then all of a sudden it's nighttime again, and probably the importance is to try and find some discipline around having some time out, actually being probably the hardest thing. But it's all good. We only get to do this, most people, at least once, so we might as well enjoy it and make the most of it anyway.
Yeah, absolutely. So we've got a few people join in. I'm going to encourage the audience to ask questions as we move through this fireside chat, which is very virtual. Kind of also getting used to having conversations with people so that we keep the community live and get to have this sense of connection, even though we're apart. But on the flip side, you're all the way in Singapore, and if I were to talk to you, we have to do this anyway, don't you think?
Absolutely.
So let's start off with you, Stuart. A little bit about who you are. I know you have a very interesting story, who you are and how you ended up in Singapore, and a little bit about HOOLAH.
Yeah, absolutely. I mean, personally, I'm from England originally. I think my accent still shows that. I grew up in sort of southeast England. I think I always had a burning desire to leave and sort of explore the rest of the world, and had the fortune of moving to Amsterdam in the Netherlands for a bit with work, to Ireland, and then I probably most fortuitously had the opportunity to do what a lot of POMs do and travel to Australia and settle in Sydney actually for about 7 years in total, where technically I also have a passport for Australia as well in my time there. So Singapore sees me now as an Australian rather than English. But again, it was work that took me to Singapore. Like a lot of people, had an opportunity to move up here, and give or take a year or so, I've been here ever since. So it's about sort of 12 years in total. I guess sort of opportunity, not as the phrase goes. I'm there, so Singapore sees me now into the e-commerce sort of payment space in 2014 with a company called WorldPay, who are reasonably sort of big, I think, now in Australia too, and had the opportunity to understand a little bit more about potential opportunities, and then sort of seeing the buy now pay later space grow in Europe, and obviously in Australia. I think a lot of the people that you talk to, and with your sort of customers and audience will most definitely know what this sort of concept looks like, and really the opportunity for us was to take that idea into Asia, starting in Singapore, and so that's what we did in beginning of 2018 at least, officially to bring that sort of solution here.
So born in London, came to Australia, ended up in Singapore, and you're also an advisor and mentor to a whole range of startup programs like Techstars and Startup Bootcamp. What led you to decide to move to Singapore and headquarter in Singapore as opposed to Australia?
Yeah, I mean, I was already here, really, I think, at that point. So that the choice was sort of less one to move to Singapore for this. And so really, it was born here. I was sort of already based here. And the opportunity was more so seeing, wonderful models that, again, Australia is quite prevalent at this day and age. And really seeing the opportunity for that merchants, or at least retailers, were looking to solve, or problems they were looking to solve, which were already being solved in markets like Europe and like Australia, and now perhaps the US, and so that was the biggest opportunity for us, and perhaps relevant to the sort of startup base. I was sort of somewhat fortunate to be introduced to that area, and perhaps that was probably the best introduction, because I sort of saw what it really looked like, other than just the glamour perhaps that some people have a view of around setting up a business and being in sort of startup. Glamour is perhaps not quite the word I'd use now, but that's it was a good introduction.
I think startups are glamorous.
Well, I think a lot of people definitely have a view of that being the case. It's sort of quite cool and quite hot right now, as the phrase goes. But you get a lot of that sometimes from people when you interview them. For example, why do you want to join a startup? It's because it's cool, etc., etc. And the realization is that it's a different type of living and a different type of working, to sort of big corporate. But there are definitely some trade-offs and some sacrifices that perhaps people don't quite appreciate. But it kind of depends what you like.
What are some of those sacrifices? There is this concept that people have in their mind that's just startups are like this, the new world celebrity status. And at the end of the day, you're still trying to build a business. And about those trade-offs, what are some of those trade-offs that you've had to make to build HOOLAH?
Well, yeah, I mean, money's probably the big one.
Yeah.
There's definitely not a lot of income that comes with that. And I mean, me personally, you move to Singapore, you work for a big company. It comes with some interesting trappings of that sort of lifestyle. You have nice apartment buildings here that come with swimming pools, and a certain degree of help at home if you come with a family as well, and it's quite hard to give a lot of that up in relative terms, and especially when it comes to sort of managing family and being used to having a certain type of lifestyle, and all of a sudden literally cutting it off at the legs and having to live a very different sort of way. I mean, your living locations definitely change. Your where you eat definitely changes. I mean, fortunately we have certain sort of food markets that you can go to where you can get some fairly cheap food for under $5, and I definitely lived that for a good 12 months, and still do to a degree. But it's a big change. But again, I think it depends on what you like. Working for big companies can be great as well if that's what you like. If you're perhaps a little bit more creative and independent and looking for sort of that next big thing, definitely startups is something that's quite exciting as well, to make those decisions and move quickly. Perhaps that you can't do it necessarily in bigger organizations.
Yeah, very, very much so. I worked in academia for many, many years before jumping into the startup world. But if somebody had told me if it was going to be like this, I don't think anybody would start knowing the grind and the hard work and the sacrifices that you have to make. But once you're in, it's also very hard to give up as well. It's a really weird paradox. And I think founders have either in their DNA or their purpose that really drives them, is what keeps people going on and on and on, and getting back up after massive failures or massive setbacks. So I can totally relate to that. I want to quickly jump into buy now, pay later as a concept. In the last couple of years, it has exploded and have become this really trendy thing. Maybe you can give us some insight around why buy now, pay later, like Afterpay and Zip and all of these companies have exploded and have changed the way consumers interact with e-commerce platforms, and credit cards have been around for a very long time. So why this concept? Why now? What are some of the catalysts for it?
It's a super question. I think there's not really one clear answer. A lot of it depends on, perhaps where this opportunity is being explored. I mean, you look at Europe, for example, that perhaps credit cards weren't necessarily an option, and they weren't necessarily very popular in certain markets. You look at Australia. I remember the lay-by model. It's effectively a lot of buy now, pay later is the same, if not reversed, and perhaps a little bit more digital. So I think the grounds for the growth that differs based on the user opportunity in those respective markets and countries. That there are probably a few trends, though, perhaps that do transcend all those different markets, and I think it's perhaps a little bit more demographic driven. You're seeing the Gen Zs, millennials, perhaps having a little bit more money in their pocket in general. They're growing up with this sort of concept of I see this now, I want this now, I want to buy this now. Perhaps they don't have that money necessarily, that free cash to buy it, and that's where the user opportunity is sort of sitting. Social media, I think, is having a massive play in this. To really show everybody anywhere, any brand, any product, what is this is something that's accessible to those people, and perhaps amplified by sort of socially largesse sort of individuals, which help to sort of promote these particular products too. People wanting to, perhaps the boundaries of the world starting to fall down in terms of travel, access to new technology, and I think all of these things, including in Asia, most definitely mobile, growing, significantly. Here I think in Asia, it's sort of something like 75% of people are already engaging mobile payments, which is massive, and really the opportunity here is again sort of seeing the cashless society moving to cash society moving to cashless, the internet effectively jumping generations of perhaps what we sort of saw in Europe historically and traditionally, and really this whole pop culture, I think, sort of movement that's really growing, and millennials are jumping on that, and obviously the next generation of Gen Z. Probably just diving one layer deeper, which I think is interesting that we sort of see in Asia related to this specifically, is actually a move of consumers, and especially that consumer group, moving away from debt and credit. Perhaps previous generations, their parents have actually engaged and perhaps negatively been impacted by, and actually then taking up more debit based or digital sort of products that are perhaps a little bit more accessible, easy to use. I don't have that desire to get into debt, so therefore I'll only use a debit card, and all of a sudden buy now, pay later comes along, and it creates a credit like experience with perhaps the shackles not necessarily being in place, but giving them access to go and, again, if I loop that back round to see now, want now, buy now, pay later. So that's I think where a lot of the drivers are sort of sitting.
Yeah. With credit cards, and a lot of the young people do not want credit cards, the term credit, as this real negative connotation attached to it. So effectively, like from a functionality perspective, buy now, pay later is sort of like short-term lending facility, right? And the users don't necessarily think of it as the credit card, like the application process, having to wait to receive a credit card, then to go and use. What are some of the mindset changes that you've noticed from your user base? Do they know that it is like a credit card, or is it like a credit card? What is the customer's financial literacy levels in using the service?
Yeah, that's another super question. I mean, in Singapore, it's a very financially literate market. I think there's a lot of education here. It's quite a wealthy market as well. So again, I think it's really that sort of final item that I sort of shared around the type of consumer mentality and attitude towards the sort of concept of using credit to go and buy. And so I think that and although that I must say that changes, I think in other markets, but I think again it comes down to I still want those items that I want to buy. We live and die by our own sort of marketing positioning, which we call responsible affordability. And responsible affordability, for us is being careful with that consumer. It's not personal financial advice, but it's really sort of making sure it's not about spending wildly. It's about getting the things you perhaps want or you need, but still keeping a control of of that sort of spending. And I think that's where we've tried to embed that kind of mentality into our business, to try and sort of make sure that consumers are getting that fine balance, between owning, buying, shopping, perhaps more of a lifestyle approach to really moving away perhaps from that concept of paying and credit, for example.
Yeah. Well, that leads me, I've had this thought. So when you use a credit card, it builds your credit profile. So you want to get a mortgage and that can be used. So customers that are using a platform like HOOLAH, do they build a credit profile off the back of that, or is that not in place?
Yeah, so one of the things that we do with our technology, and perhaps sort of one of the benefits of this as well, is very much around having something that's independent to assess someone's ability to pay. A lot of these sorts of systems, one of the first things they do is loop into a credit bureau, for example. One of the challenges in Asia is that that's not necessarily prevalent in every market. And so that would create a problem for us as we start to sort of grow across multiple markets. But on the flip side, actually, it's a beneficial outcome, because if you're 18 to say 25, maybe 29, sort of early 30s, you might not have a credit footprint anyway. You might not have had to access a loan for a mortgage or a credit card or whatever that may be. And so you don't necessarily get access to some of those sort of financial vehicles that you should be able to get to, because perhaps you're earning good salary. It just, you don't have that sort of footprint behind you. And I think that's where technology can come at assessing someone's footprint from a different angle, and that's really one of our benefits, I think, from a consumer perspective, and what we've built out.
So what is the competitor landscape like in Asia Pacific, Singapore, Vietnam, Thailand, all these countries, and what made you set up the company in Singapore as opposed to Australia?
Yeah, absolutely, good question. I mean, Australia was obviously an inspiration. I mean, there's some fantastic companies down there, that I know very well. I think it's been amazing to sort of see, the growth of those companies. They really have created, built some amazing products, and sort of innovation, I think, is something that a lot of the companies are also working on to differentiate. It's definitely a fantastic inspiration for us as a company to go and sort of see that happening. But I think off the back of that, Australia is also a very is a market that is very sort of busy. For us to sort of come into that, it's probably not a sort of commonsensical choice, and so it's not a approach for us. So, and really the opportunity, and perhaps back to the core of your question, is that that there really isn't that much competition, at least across the Asia region. If you look, sort of broadly, there are a couple of companies that have also done some fantastic things in certain countries. There are a few different models and ways of bringing buy now, pay later. I mean, I'm seeing buy now, pay later as a phrase being used for everything, and it's quite funny as it starts to sort of perhaps muddy what it truly is. But that's fair if people are understanding and listening, because it can only be good for us to to sort of popularize, what we do. So for us, really the opportunity when we set this up and started even thinking about it, 4 odd years ago, as we sort of saw, companies like Klarna and Afterpay and sort of Zip, for example, really, creating great value, was to sort of see almost a white sheet of paper in front of us to go and start drawing something on it, because it really was a sort of somewhat nascent market, and really that's where a lot of our thinking was to go and do that. And Singapore, well, I mean, there's probably a personal angle and a work angle. Singapore, if you've spent some time here, it's a super country. It really is sort of what's so well set up. It's very easy. It's tiny, easy to get around. Everything works. You don't really have to think too much. Generally you just wear shorts and t-shirts most days, because there's not.
I mean, you can do that in Sydney as well, can't you?
You kind of, yeah. But and I do remember winter just being slightly sort of, cooler, and at least having maybe a pair of jeans and a shirt. But it's very sort of simple, I think, from that perspective to get around. Technology is very strong here. There's some great talent. A fantastic education system. The regulatory landscape is very strong, and as I said, personally, it's a very easy place to exist. There's a lot of capital here, a lot of venture capital companies that sort of based here. It's often seen as the sort of a gateway to the rest of Asia as well. So if you're looking at sort of scaling a business across the region, it's a great place to be from that perspective. And related to this business, it's also quite a safe spot to really sort of start to innovate and explore and test and tease. And if you can build it here, I think you can probably build it in most countries across Asia.
You mentioned regulatory requirements. I want to dive a little bit deeper into that. And to build a fintech company, regardless of what solution that you're providing, there are some strict and heavy regulatory requirements that companies need to meet. Could you shed some light on some of the similarities, differences between the ASIC and APRA and Singapore regulatory frameworks, and which one's more conducive for startups to establish themselves? And is there opportunity for startups that are in Australia wanting to maybe move, maybe scale into Asia? What are some of the things that are really valuable to know for our audience regarding that aspect?
Yeah, sure. I'll be honest with you, I'm not a massive expert on the regulatory landscape in Australia, other than sort of what I sort of see and read. So I'm sure there's bigger, better experts than myself in that situation. So maybe if I look at so Singapore and Malaysia, where we launched last year. I think that the one thing that probably transcends regulatory landscape in any market is that if you're a startup, typically you're probably challenging some sort of regulatory requirement somewhere. There's typically some sort of grey area, because you're breaking perhaps the norm. You're innovating against perhaps an existing model, and typically regulation has a lag period to try and catch up to innovation. And so, the biggest challenge, I think, in any sort of startup business is to, find that balance between, not doing something that's, completely illegal, and then hoping or making good preparation for your business sort of setup. And hope that perhaps it doesn't sort of get the opportunity gets sort of blown out of the water, so to speak. And I think what's important in that is to make sure that one, that you've got a very good sort of legal partner. I think that is very, very much deeply connected to the sort of fintech space. Perhaps the sort of regulatory bodies. In Malaysia, there are a lot of institutions and associations that can help get your feet up, feet on the ground to start growing. MDEC is a very, very good association that provides a lot of support to sort of startups. Back to Singapore, the MAS, the Monetary Authority of Singapore, Singapore as a country, I think, is very forward thinking. It's very supportive of new innovation to drive, inherent value and wealth in the country, especially it being a city state. And I think the sort of financial regulatory body here, you can look at the types of, the people that work there and their approach and their attitude, the bridge work that they do to other markets. It just goes to show, I think, of their intent to, to sort of support, rather than to stifle. But it still remains, it's very important to make sure that you're looking after the consumer. I think in anything that you do, and we've definitely taken that approach in every market that we go to make sure that we've engaged as much as possible, as early as possible, with the authorities and those regulatory bodies and the legal profession here.
Yeah, I mean, regulation is sometimes seen as the enemy of scale. And there are certain startup verticals where there aren't that much regulatory constraints, but definitely for fintech, that's something that companies need to think about, and also from a cost perspective, account for those compliance costs that are associated. So in terms of building a company like HOOLAH, taking it from idea to a product launch or getting product into market to meet the regulatory requirements, build your product, build a customer base, do your initial integrations with your customers. From a product roadmap perspective, one, how much funds are required to launch the product, and what do you build first?
Listen, I think we've only got 30 minutes to chat, so this could be another 2 hours to talk through the story of what we did. I mean, our specific journey was reasonably long. When we were sort of starting to think through what it was going to look like, because there are so many challenges to overcome, as you sort of pointed out. But again, it comes down to the sort of the spirit of startup in the first place. If you've got the passion and the desire to do it, you're going to find a way, right? You're wearing it on your T-shirt right now, and I think you have to have bucket loads of that to go and sort of make something happen. When I look at sort of all the different elements we do, we had to just break it down, I think, into the critical elements that we needed to sort of cover off to get to what we defined as that sort of starting point. What did we need to ultimately prove to either a merchant, a customer, or an investor that what we needed to what we were building and the outcome of what that looked like? I mean, to be honest, our MVP was sort of somewhat simplistic, but it was beautifully put together by one of our co-founders, Daniel, and it was a fantastic sort of celebration. I think when we saw our first transaction come through the system, we were very nascent, I think, until we raised our seed funding as well, back into 2018. But then if I work backwards from there, what we had was a great team, an MVP that worked, a merchant that sort of saw the value, that would pay for it, more importantly, and customers that used it. So if I look back at that, the MVP across the whole business, maybe MVB, the minimum viable business, I think that's the sort of the critical elements that we brought together. In terms of cost, I mean, I couldn't put a number against that, to be honest. It was whatever it took.
Yeah. So how do you then go from launching your product in Singapore, building partnerships, and then starting to scale? As a CEO, you have to make some very critical decisions that might be challenging at times. So how do you manage profitability versus growth? And how do you make that juggle?
Yeah, I think there's probably something to be said for a startup mentality around that as well. And there's to me, and maybe I'm wrong, there is a difference between profitable and a profitable business model, with a plan. And I think, we've probably sort of seen, three different, versions. So, companies that just create lots of customers, and try to then sort of monetize that afterwards. And this is neither there's no opinion whether that's right or wrong, but it's an approach. You perhaps have a profitable business model, at least, with a plan to make a company profitable over time, and then you've got, sort of just profitable first, and perhaps growth last. And for me, I think it's probably, at least in terms of how we've looked at our business, is to create something sustainable first, at least in terms of a business model, and then really sort of grow sustainably off the back of that as well. And I think that was important, because again, when you're especially at this the sort of the current times that we find ourselves in, those companies that don't have a business model which can make money are probably sort of thought of less than those companies that have a business model that can ultimately make money in the future, and sort of show that growth at the same time, and really sort of get to that point of break even and profitability a little bit sort of sooner, off the back of the support of those sort of the VC type investors.
Yeah, and with growth comes a lot of risks as well, right? Because you're dealing with multiple partners. How do you mitigate that risk as you scale? And when opportunities come knocking on your door, there are capital requirements, and then there are the regulatory requirements. So it's, as you mentioned before, there are a lot of trade-offs that you have to make. And how do you manage that? How do you manage the risk? Because it's heavily enforced by the regulators to meet those compliance requirements. At what level do you say, okay, we're going to ignore XYZ part of the business for now and then build something, because you have to make that trade-off? And what frameworks do you use to make those decisions?
That's a good question. I mean, we're not sort of too too extremely different from any company, in the sense that we have every year and every quarter we have a plan, and we focus on the elements that we think is going to contribute the greatest value to our business. For us as obviously as founders of the business, but also for the investors and shareholders that we have inherent within as well. And so that plan is sort of something that we put together. We make those hard choices, because there are things perhaps where other people have bias, or sort of perhaps personal interest to go and follow. But ultimately, it's those tough conversations to say, no, this is the best outcome for us in the next sort of 12, 24 months. This is where we're going to head. I think, and then the risk element within that is, to me, it's like, I don't know, maybe it's like I don't know what's the word. The difference between taking a risk and gambling. Gambling is something perhaps you don't necessarily have a knowledge of an outcome, because it is literally sort of black or red, perhaps when you're in the casino. Whereas I think taking risk in a business, if you've done your homework and you've done the groundwork and you've invested in understanding what that risk looks like, and you can take that risk, because of the sort of return, and the risk is not too great, depending on what your approach is, and perhaps what you could lose. Then that's typically kind of how we go about doing things. There's a lot of homework, a lot of education, a lot of sort of thinking. None of us are. None of it. One person sort of described startups sometimes as being 25-year-olds in hoodies, and unfortunately none of us are that age anymore. And I think I've got a hoodie, but don't wear it very often. So it's I think that there's something to be said for the kind of people that are building a business too. Yeah.
Well, risk is there's always risk around everything that we do, right? And understanding and making those decisions sometimes can be challenging. In terms of your competitors in the market, what does the competitive landscape in Singapore look like for your business, and how do you remain competitive, or what is the leverage that you have?
Yeah, listen, I think we were very much the sort of starter of this sort of concept in Singapore. The concept of installments has been around a little bit, with from sort of point of sale financing, for example. But the concept of buy now, pay later is something that we introduced into that market. And I think what that gives us is a lot of learning, a lot of experience. We've built up a fantastic portfolio of merchants. With merchants comes some fantastic data points, proof points, to show that what we do and the product that we've built is something that's sort of better than any other sort of player that may exist. And I think that's sort of somewhat proven in terms of those outcomes that we can deliver. It's a very sort of solid sort of positioning. And in the end of the day, when you're sort of selling, it's important, I think, always to position based on the value of the business too. And you listen to these customers. What are they looking to do? And they're looking for more customers. They're looking to get them to buy. They're looking them to spend more. They're looking for them to come back, time and time again. So everything that we've built in our solution is very much based around these sort of 4 different elements. And rather than just being just being a payment company, we're a lot more than that in terms of how we engage our merchant and how we integrate them ourselves into them. And you mentioned the word partnership, and I think that's probably maybe it's the semantics of English, but that's very much how we look about building that relationship. This is not here's a bit of buy now pay later and I'll see you later. It's very much this is a solution that we embed into your whole customer journey. This is a channel for you to exploit and explore, and we're here to work with you to go and maximize and optimize your existing investment into conversion, and ultimately to help you drive even more. That's why we're here.
Have you noticed, because it's e-commerce and the products that are used on e-commerce platforms, the brands could range from multi-billion-dollar companies to very boutique individuals who've got an e-commerce store. Would you be able to shed some light around the breakdown of various different segments in your merchant relationships?
Yeah, I mean, we've taken a slightly different approach there, I think, as well to some of the historical businesses that have been in this space. I mean, we've been very broad, very multi-vertical approach. Consumers, for example, in Singapore, the top elements that they look for is travel. It's looking for electronics. Fashion is definitely still part of that, but it's not the only vertical that's important. I mean, and when you look at the success that we've had with sort of 400 plus merchants that we have now, you can literally, it's almost like walking into a department store, and the different verticals that we cover, from home decor to accessories to men's, ladies fashion to lifestyle to health, beauty, you name it. We literally cover it. And I think what's really interesting is seeing the demand from other companies actually now looking at this as a solution. Where we've had interest from like internet dating, for example, to insurance, to
what is the biggest internet dating platform in Singapore?
I'm not sure. I understand from my friends that it's the one where you swipe right or left is still quite popular.
Bumble, RSVP, OkCupid. I don't know. There's like a whole bunch of companies.
Australia is very big for that. There's a couple of companies here, and I've not really but it is still very much a popular space. And at the end of the day, from a merchant perspective, it's just making that that sort of service or product appear a little bit more accessible to a consumer. And if that's what makes the difference for them, then why not? At the end of the day, it is the consumer that's going to make the choice as to whether it's relevant to them. That's very much I think the interesting thing that we build here. This is not just a merchant service or a consumer service. It's absolutely that network that you're creating, and it's very much inherent within our mission, which is to bring merchants and consumers closer together.
Yeah, and relationship building is hard work, and sales cycles can be very long as well. So essentially, from what I understand, your business is kind of like a B2B2C business, and your relationship generally exists with the merchants. how long does it take to build a relationship, having the first conversation to implementing the tech, and what are some of the steps along that cycle?
Yeah, I mean, it's interesting. Maybe there are sort of two different answers to this. There's the startup answer, in that, you know, no one knows who you are.
Yeah.
It literally the chicken or egg sort of conversation. I mean, I remember right back at the, you know, at the start, sort of fumbling around, you know, trying to, you know, sort of create an image of a business, you know, to try and create that trust inherently within this company where, you know, we didn't really have much at all. And again, you know, I allude back to your T-shirt, you know, because that's, you know, what you're having to do an awful lot of. You know, I think that that's an appropriate term for everything that we've done and still continue to do and have to. But in the end of the day, you know, as you start to, you know, you get that experience, you get those proof points, you're able to, you know, to deliver that back. You know, the relationships, it comes from, you know, perhaps networks that we already have here through partners. You know, you've used the word partner, perhaps that's the other side of partner. You know, where companies perhaps have also see value of providing this service, or at least offering that to, you know, to companies which, you know, perhaps, you know, we sort of share an interest in working with, and an outcome perhaps as well, more to the point. And so, you know, it really is about making sure that, you know, you've got those foundations in place. And when you look at the sort of sales process, you know, and a lot of my career has been in the, you know, commercial roles. So there's a little bit of bias perhaps, or sort of experience with that. But for me, you know, and what we've put together is very much, you know, having a very clear methodology and structure and discipline and science almost around, you know, a process. You know, getting to know the merchant, understanding what they're looking for, and how we can ultimately sort of solve those requirements that, you know, we're looking to deliver. You know, again, as I said, those proof points that are important to go and deliver the fact that, you know, you've done this before. You know, we've got you. We can do this for you. It's sort of very simple. There is something to be said for, you know, different types of companies. You know, and I mean, I've worked with big companies and small companies in my career. You know, the bigger companies, there's typically a lot of people that need to, you know, to be talked to and shared and understood. And in smaller companies, perhaps you're dealing with the owner, you know, of the business. It's a slightly different, you know, engagement, because you have a more authentic, you know, direct, quicker conversation where you can make decisions perhaps a little bit quicker for their own stores. But that being said, again, if the demand is there, and you hit the right spot, you know, the sort of speed is almost a determinant of how keen they are to, you know, to move. And, you know, we've had, you know, sort of our quickest sale, I think, was in 20 minutes, you know, from conversation to contract, and almost, I think, another sort of 30 minutes to go live. I mean, it really can be. I think technology allows us to move that quickly. And there are some companies, you know, we're still talking to after 2 years, you know, just because it's trying to, you know, get this as a priority on a sort of a tech stack. But it's all part of the fun.
Yeah, indeed. So I love talking about partnerships, but because I think any business is built on the base of trust and relationships, because human beings interact with human beings. So you have your merchant side, and then you have the technology platforms that you have to work with to integrate, to build some way of connecting to your merchant. So what kind of e-commerce platforms do you work with? Are these the big Shopify kind of platforms? Are there Asia-specific platforms? Could you talk a little bit more about your technology partnerships and the relationships there?
Yeah, I mean, you hit the nail on the head, really. They're all really, really important. You know, for us to go and deliver a service to a merchant that uses one of these carts or technology platforms, you know, we have to be, or at least it makes a lot of sense to be pre-integrated to that. And where perhaps we're not, you know, there's other companies perhaps where we can integrate to them to be a distribution channel for us to, you know, to access those merchants, and we're starting to sort of build that channel out now as well. I'll give you perhaps a really great sort of case study and proof point for us. You know, we invested quite heavily at the beginning into Shopify. You know, you use that particular brand, although obviously we work with sort of others as well. But Shopify have been hugely supportive. It was not an easy conversation at the beginning because again we're a startup with very little, but somewhat fortuitously, their team trusted us to build something amazing, perhaps based on the experience and expertise that we had prior to setting up the business and some of the connections. And we put a lot of effort into building up that partnership, supporting them, supporting their brand, delivering value, to their customers. And actually, around I think it was about sort of 2 weeks ago, we were actually they announced that we were upgraded to being a full payment partner for them. And there's very few companies that have the honor, I think, of being into getting into that sort of position, which ultimately means, if you're a merchant, HOOLAH is very much there, present to just effectively sort of add to their site instantly. And the commentary around that was very much around, listen, you guys have done so much for our merchants and our customers. You've delivered the value that you said you were going to deliver, i.e. sort of increasing sales, increasing basket, delivering sort of brand value and their brand message to the broader community. But also, I think the effort that we'd put into that partnership around creating, sort of Shopify events, getting other speakers to come along, creating value. We've had some amazing events last year. It's a shame with COVID-19 that we're itching to get out and do some more of these. But we've had 150, 200 merchants turn up, and great brands like Facebook and Google come along to some of these sessions. And of course, people want to hear from some fantastic brands like that. When they're trying to build their businesses, and for us, it's not about HOOLAH as the brand necessarily. It's about our merchants' brand that we're trying to promote. It's their message that's important, to their consumers. We just stand there, for buy now, pay later, and we effectively represent one trust, of course, because we're dealing with people's money, and effectively it's lifestyle, because that's what we're there to improve for the consumers.
Yeah, that sounds like a lot of fun. I hope you are having some fun along the way.
Yeah, absolutely. It was funny when the investor said to us the other day, he said, "You know what, Stuart? One thing that you just have to remember," he said, "you just have to have fun." I said, "That's a very good reminder. Thank you."
I mean, what is the point otherwise, right? Like, you hustle so hard, you live on the poverty line, people are telling you that it's not going to work out, you have all of these obstacles and you're climbing an uphill battle, and from the outside it might look, very glamorous, but I'm sure you've had many sleepless nights and thinking about all the usual things that founders think about, mainly around cash flow and when are we going to get the next sale and all of these things that bothers you. How do you keep focused? How do you convince yourself to continue? What are how do you overcome the mental blocks that you face?
No, I haven't worked that one out yet. So maybe you can tell me. No, I'm joking. It's listen, I think that the one thing that actually it's interesting. The one thing I ask people, when they come to for an interview, for the business, I ask them, what is their sort of true motivation? Because a lot of people will say, "Oh, listen, I want to make money, or I want to build amazing things," and everybody can say that, but everybody has that one little thing that really sort of drives them, that gets them out of bed, that when they've been knocked back, that gets them back on the right path. And I think what's important is for myself to ask myself that question, and obviously from the existing team, and to remind that, and it's those sorts of drivers that ultimately you remind yourself every day. But overarching, you kind of touched on it already. You put so much sacrifice and hustle into something. There is so much effort, so much sunk effort and cost of life, that you put into trying to grow something from nothing. Those moments when you look up at your wall in your office and you've got this cardboard cutout of your brand name sitting there, and you think, my goodness me, that didn't even exist 12 months ago, and there it is, just standing there, and now we've been in the newspapers, we've raised money, we've got customers writing in every day, talking to us, we've got merchants that write in going, "I want to have HOOLAH on our website, how can we get it done?" I mean, it's that kind of stuff that you remind yourself every day that, you know, this is amazing. You even remember how the brand name came around, and the time you spent trying to come up with some name, you know, out of nowhere, and all of a sudden people use it. You know, big brands are, you know, we were in one brand the other day and they were, oh, we love HOOLAH, it's fantastic, best thing we ever did in 2019, best decision we made to add it to our, you know, to our business. You know, it's created so much great outcome. You know, we want to add HOOLAH into this and HOOLAH into that, and I'm going, you know, the sort of the hairs on the back of your neck are sort of you know, standing up and tingling because you're so excited by the fact that, you know, again, there's this name that you made up, you know, sort of 2 years ago, and there it is, people using it in your everyday sentence. So the sum total is these little sort of moments, these little wins, you know, you continue to sort of celebrate, you know, along the way. And again, you remember why you did it, and, you know, the sort of value of what you're trying to achieve, and perhaps what you want as an outcome. And there's always some personal drivers around that, you know, whether it be, you know, family, you know, you know, definitely my little daughter, you know, is definitely one of those drivers for me as well. And I want to call that out for sure.
Yeah, amazing. I relate to all of those things that you just said. We have a question from one of the members in the audience, Tim Chan. Tim saying, do you think consumers will use buy now, pay later more during an economic downturn?
It's a really interesting question. So, I mean, I can only answer that with factual proof as opposed to, you know, a thought. You know, just to sort of share, I mean, our business is growing, you know, month on month, about 50%, you know, from March. You know, we just sort of finalized our figures for April. And that's in terms of, you know, transactions and in terms of sort of revenue. And you know, when you're looking at those kind of month on month, you know, sort of growth stats, you know, I've got to probably draw some parallels to the fact that, you know, we are in a different situation. Perhaps it's driven a little bit, and we can't determine this at the moment, by virtue that people are in lockdown, and you know, that people are, you know, perhaps getting a little bit bored. We've definitely had some people write in, you know, saying, "Oh, I'm just bored to tears. I'm sort of just shopping," you know, from that perspective. And you start to look at the distribution of transactions if when they come in during the day. But also, I think you start to sort of see, you know, perhaps the shift in terms of what people are buying as well. You know, it's definitely, you know, starting to see things like home decor, for example. And I've had to do the same. I'm sitting at a desk that only arrived, you know, on Monday of this week, and so I think we're sort of seeing a lot of that. You know, a lot of, you know, what can you do at home stuff. You know, fitness at home stuff. A lot of health and beauty. People not just wanting to be healthy, but perhaps they're sort of sitting on these video calls a little bit more, and you know, they have to sort of make sure that maybe if the filters aren't working right, you know, to make sure that they're looking good as well. You know, unfortunately, it doesn't ever work for me anyway, regardless. But you know, it's those sorts of verticals, I think, that we're starting to sort of see people, you know, using, but just for a different reason. And in the day, merchants are in an interesting situation where, you know, they're perhaps some of the shops are closed, right? So, okay, how do I buffer my lost sales from an in-store perspective? You know, and so online becomes more prevalent and an importance of digital focus for them, and they've had to sort of shift pretty quickly if they haven't already been doing it. So how can I get to drive more sales, you know, within that existing sort of online, you know, so space? How can I get customers to come to us? And we solve that problem for merchants. And on the flip side, you know, it's an interesting time. You know, there is a little bit of, you know, what's the future going to look like? What's the new normal going to be looking like? And so if they are still, you know, sort of spending or need to spend or want to spend, you know, perhaps if that price is sort of split a little bit, you know, it just makes it look a little bit more accessible for consumers to, you know, to make that decision. So yes is the answer, I think.
I've also been online quite a lot, looking at various different things that I could buy, you know, and it's all around work desks and how I could make my workspace a lot better at home, and it must be so interesting for you to see the consumer trends, how that changes, and link it to some macroeconomic factors that happens, and see what are some of the trends. What do you see the trends of e-commerce for the next couple of years?
Yeah, it's interesting. I was on an economist panel last week, which was, it's also very exciting, and it was interesting. They'd done some research, amongst the sort of companies, and it was sort of a kind of like a bar chart showing all these different industries, and the sort of the impact on revenue, on the impact on profit. And then e-commerce was in completely the opposite direction, because actually it's been quite, sort of successful at this time. It's bucked the trend, I think, from that perspective. So I think that's definitely, sort of sped up the development of that as a channel to market. It's not necessarily, I think, going to be the only place that people shop. Having spent a lot of time looking at consumer behavior, consumers still like to sort of feel in touch sometimes. Logistics is a little bit harder in Asia, because of its sort of fragmented infrastructure. But so I think that but I do think that people are getting used to, using that. I was on a call with a friend of mine, yesterday, and he said, "Look, even my parents know how to use Zoom now." So when you start to put, that sort of technology in the hands because they have to, you start to see, I think, you drive that to adoption, from that. So I do think that we're going to see a lot more. That new normal is definitely going to be more digital, or perhaps it will enhance that omnichannel experience, from a solution perspective. And actually, one of the things that we're building is and about to deliver is our in-store capability as well. So you'll create that true omni channel, O2O, whatever sort of terminology you want to use, sort of experience where a consumer can buy online or in the store, but still experience that same lifestyle, that same experience of not necessarily having to sort of pay everything up front.
Yeah. Consumer trends and consumer behavior is definitely a topic we could talk for days on end, and we could do a whole new episode around that. I think we're coming up to time. Before we wrap up, and thanks for everyone that joined in on Facebook and asking the questions on a Friday afternoon while we're all at home. What is your vision for next year? What is this one big goal that you would want to achieve for next year?
COVID-19 to be perhaps out of the way so we can go back to the office.
Craving human connection.
Yeah, well, it's ironic. I mean, I'm a reasonably sort of outgoing individual, and I've worked from a home office before. I mean, when I was in Australia, I did it for about 4 years. Working for a business. I was effectively the office for a number of years in the Australia market. And I'm reasonably okay with working, from a home office, but trying to run a business, from home with a group of people sort of spread out, that's a slightly different sort of matter. So it is good to create that little bit of togetherness in person, as you said at the beginning. Humans like a little bit of sort of proximity and touch, or at least most do. And so I think that's important. So I think even just for the the benefit, I think, of our team and our people, that's the important thing for us, is to get back to that sort of normal operating procedure, but perhaps take advantage of sort of some of the things that we've seen, and outside of that, for HOOLAH to continue to grow, to add value to our merchants, add value to our consumers. I mean, I see there's a question here, some from Facebook, around pricing models, for example. For us consumers, it's about seamless experience. It's interest free. We don't charge the consumer at all. It's really the investment for a merchant to engage that consumer. And so hopefully, if that's our mission, is to bring merchants and consumers closer together, that's ultimately what we want to, what we wanted to deliver. Commercially, for the consumer, it costs nothing. The cost and the experience is as seamless as we can possibly get it, while sort of balancing, risk and understanding of that consumer. And really, again, it's for the it's the merchants effectively, investment to go and achieve that extra sale that perhaps they couldn't do themselves, or it would cost significantly more by doing so. And so, really, that's where our sort of commercial economics operate.
Thanks so much. Thanks for joining in. Thanks for the audience that joined in as well. And I will see the rest of you on another event. And Stuart, thanks so much.
See these nobodies try and kill the queen. You got best of three, then it's time for me.